All right, guys, we are live. So I wanted to jump on Facebook today and talk to everybody and actually bring some value to our community, to my fellow agents, to buyers and sellers in the marketplace right now. I know I've had a lot of people reaching out to me, very uncertain, very scared. A lot of people want to know what's going on with the Fed rates, if they should refi right now, if rates are going up, if rates are going down. And the answer is kind of all of those things are happening. But we really want to share some value. Chef is an agent across the US. Andrew is a loan broker here in Las Vegas. Ryan is my broker here in Las Vegas for King Realty Group. And we all wanted to chime in and just give our fellow agents some tips on how they could possibly conduct business remotely, even in this time of quarantine. So the number one thing we wanted to start off with was Andrew is going to talk to us about the Fed rate. I know that's really something that's on a lot of people's mind. People want to know exactly what that means. So Andrew, when we're talking about the Fed dropping their rates, what does that mean to our community, to people that are in escrow right now, to people that are thinking about buying a home, and to people that are thinking about refinancing right now?
So that's kind of been the biggest topic. Is on Sunday, the Fed decided they were going to lower the interest rates or the Fed funds rates to zero. The number one phone call and text message was, how do I get a 0% interest rate? And so what they did does not affect actual mortgage interest rates. What it affects is the short-term credit. So like for credit cards, auto loans, personal loans, stuff like that, that's what it actually affects. Now, you'll probably see around town, some of the credit unions have already started offering car loans at 1.99% or even 1%. So that's kind of the direct reaction of what actually happened with them lowering the Fed funds rate. What people are not talking about is QE, or what's called quantitative easing. And we haven't seen this activated in mortgages in a very long time. And so that was something that was enacted on Sunday, going effective as of Monday. And so here's what QE is. So we saw a lot of it back in 2010, 2011, and 2012. And at the time, that's what kept the interest rates historically low. What the government is doing by QE is they're saying, great, we're going to take money and we're going to start buying into the mortgage-backed securities. And so they committed to $40 billion up front right now. And so what that does is it's going to go ahead and give a higher demand for mortgages because now there's more money to actually buy them. With the higher demand, that typically brings in lower interest rates. Now, this was enacted on Monday, and we've seen little to no effect actually improvement in pricing. And while it did improve initially on Monday and Tuesday, today was a horrible day for interest rates. The markets moved more today than I've ever seen in my career in a negative direction as far as mortgage interest rates. And so now we've got to think about why, what's happening to the rates, what's causing that. And so a big piece of that is the financial stress that the mortgage system is under right now. And so it's under stress for a couple of reasons. Reason number one, if we go back to 2019 and we look at the total volume that we did as all lenders across the country, banks, credit unions, mortgage brokers, all of them, we did just a little bit under $2 trillion as an industry as a whole. Now, when we got to the lowest interest rates back at the end of February and that first week of March, March 2nd, March 3rd, the rates were, we were at 2.75 30-year fixed, VA, FHA. We were conventional 3 1/8 or 3 1/4 30-year fixed, all with no processing fees, no underwriting fees, no points, nothing. It was the cheapest money you could have gotten in that first week of March and the end of February. So it caused a huge demand for mortgages, right? Everyone's rushing in, let's refinance. Everyone who's buying a house, let's go ahead and purchase a house. And so it created a huge response, bigger than we've ever seen. Refinances volume has been up 400% from last year. So just to kind of give you an idea of how many loans went into the system. Now, there's a lot of rumors and theories and estimates being thrown around. I've heard even as close to up to 1 trillion has been already thrown at it in the first quarter. So if we take that on a figurative level, and again, it's not verified, but let's just pretend that is the real number for a second. Well, it took us 12 months to do 2 trillion. Now we have all that happening in the first quarter, if not 60 days. And so that puts a huge capacity issue onto the lenders. Now, how it works for these lenders, if you've ever had a mortgage before, you've probably noticed that when you have sold or purchased a house, it closes in one lender's name and then gets sold off to another lender. It gets transferred to another servicer, and you make your payment to somebody else. What that is that lender finally got it off their warehouse line and into whoever they sold the loan off to. So what happens in that is lenders have what's called a warehouse line, and think of it as a credit card. And just like any credit card, they all have a limit, and at some point it fills up. So when you have this much volume going into the process all at once, well, their lines filled up. And so we saw interest rates jump in that first week of March before the virus got the traction as far as what it got in the media wise and for all the local shutdowns. But we saw lenders already pulling back on interest rates immediately, even before, again, that virus got the traction. And why they did that is they got to capacity. They had no more money to lend out. And at the same time, their portfolios, all these lenders are having massive loss, massive rollover, because everyone inside of their portfolio currently is trying to refinance. And so they're paying off these loans a lot quicker. So banks are literally taking a bath in this last couple of weeks as far as losing funds. So that's essentially what caused the interest rates to jump. Now, where I'm getting with all of this, right now we're at that capacity issue. And as these lenders kind of get everything cleaned up, they get these loans closed, they get them sold off, the feds keep buying and the feds keep putting more money into this. That means there's going to be a demand for mortgages, and it's going to bring the rates back down. So what we're likely going to see, not now, but probably in the next 30 to 90 days, is those interest rates are going to drastically come back down. Will we get to what we had at the end of February and the beginning of March? Not sure. But is it probably safe to say we could see things go back into the mid to high threes on 30-year fixed? Yes. So what I'd recommend is if you're looking to refinance, I'd probably say just get in line at this point. What we're telling all of our clients right now is get your application in, sign the disclosures, and sit and wait. We watch the market every single day, so we're going to pull the trigger on that right day. For our purchases, it's kind of one of those, it's just the wrong time. What we're telling them is that, look, you're going to purchase, you're going to close, and we'll do a refinance for you a little bit later down the road. Obviously, we always tell our clients that we do a purchase for, we'll do the refinance at a concession, just because there's no point in paying costs twice. So we'll try and help them out a little bit. But nonetheless, this is a great opportunity as far as interest rates go. They will come back down. But yeah, that's kind of what's happening with the market and interest rates at the moment.
I love that you guys are taking that stance proactively to help out clients. I mean, this right here, PIF Lending, pay it forward, that's what it stands for. So you guys are leading with that foot. So hats off to you for that. You know, it is a little bit scary right now, but one opportunity that I see in the market that wasn't available a month or two ago is, you know, Andrew, you and I have worked transactions together where, you know, at a 250 price point, I mean, we pulled out all the stops. I mean, we're talking, we both sent videos, letters, you know, anything and everything we could do to get our clients' offers accepted. Right now, there's probably a little bit more of an opportunity for buyers that are still out there that are financially stable, that can sustain this for a month or two to get out there and put a contract out on a house, and, you know, within the next month catch a really good loan rate. So, you know, if you're stable, if you're feeling that you're able to weather the storm for a couple months, this might actually be a really great opportunity to buy. Ryan, can you chime in just a little bit, maybe for agents, buyers and sellers that are under contract right now that have contingency deadlines? What are some things that people can do to protect themselves or to ease those types of fears right now as we go through this in our market?
Well, I mean, educate yourself. I mean, and start by watching this video. So it's, you know, look, I mean, this isn't the first, unfortunately, like, crisis of my lifetime. And what people seem to need to really understand is real estate is not the stock market. Okay. You know, it's not going to go up 50,000 and down 100,000 and up 150,000, you know, each day. It just doesn't work that way. Real estate, you know, there's a delayed effect on things. So if you look at, if history's told us anything, I mean, the foreclosure crisis, this is a different kind of crisis, but it's, and this is not really economical. This is viral. So it's, you know, I'll go back to the numbers for Clark County in Las Vegas. You know, we had, you know, going into the 2007 first quarter and second quarter, we had things were fine, and, you know, it was you know, real estate as usual. And then all of a sudden, towards the end of the second quarter, you started seeing supply go up quite a bit, and we peaked at around 27, 28,000 homes. So for about 3 or 4 months, it just kind of stayed that way. And then, come September, you started seeing foreclosures pop, and there was like a new price out there, and pricing started going down, but it didn't impact, immediately. So it takes time. This is a little bit of a different beast, and there's still homes that are selling. Just in the past week, I'm on the MLS right now. I'm seeing 700 properties went into escrow just in the past week. Our supply, has been going down since October, and looks like it bottomed out at about 4250, 4260. And for those that don't watch the supply, let me give you some scale. When you're under 7,000 homes for Clark County, we're talking single family available. You're in a seller's market. When you're above 11, 12,000 homes, you're in a buyer's market. Buyer's market going down, seller's market pricing is going up. So we had a lot of buyers out there that were having problems buying properties because we were getting that into that low level of supply, and so that's why I think, and that's why I still see properties going into escrow. Now I have seen the supply go up in the past week, really. Right now we're at 4,500 homes, so it went up by a couple hundred homes, but those are all cancellations. Basically half the town or a quarter of the town, because we're a tourist town, got laid off. So I've seen a lot of cancellations. I know title companies usually have a cancellation rate of about 30%. That cancellation rate doubled just in the past week. So, it's just a question of how long could this go on for? I believe that real estate will be fine, and I don't think we'll even see pricing going down, if this is only a 2-3 month thing. If this goes into 4, 5, 6 months, and supply continues to go up, supply would have to drastically go up for see pricing going down, and I just don't see that happening. I think, and let's talk about foreclosures. So they stopped foreclosures. They said no more foreclosures while this for the next I think they said month and a half. And so now, so what's going to happen after we kind of the dust settles with this is you're going to see more foreclosures. Well, is it that you're seeing more foreclosures, or you're just seeing a backlog of foreclosures popping up? And that's what it is. Will be a backlog. I suspect any new foreclosures, because unfortunately, low income people will be affected, and this will put them maybe in a bind. They'll miss a payment or two, but I suspect a lot of that will get worked out through mediation, because this is unprecedented and unprecedented. Thank you. So I imagine a lot of it's going to get worked out through mediation, and life will go on.
You mentioned 1.2 as far as housing pricing or house prices dropping too. Let's remember what happened in the last recession in 2008, 2007. This was artificial loans that didn't really qualify. People could sign 2 or 3 pieces of paper and go ahead and get a loan, not document income, not putting any money down. And then not only could they do that for their primary residence, they could do it for 6 other investment properties as well. And so what we had happen in 2008 is there was such an absorbent amount of supply of homes that went to the market, because what happens in any recession? What's called unemployment. And yes, people lose their jobs, they can't make their bills. And so if they own a home, they're probably going to lose, and they'll end up into a multifamily type rental. But at the end of the day, when you have that property you're possibly losing and 7 others that you're losing, and now you multiply that by every American in the country, especially Las Vegas, because we were one of the hardest communities hit. Well, sure, 5, 6 properties going back to that market, that's what's going to cause the prices to drop so much, especially when everyone had it. And just to really kind of to bring it home, let's talk about some of the people that did qualify. You've got people that made tips or completely commission based, and that hurt and lost money in the last recession. Well, they had 6 investment properties, probably not a good thing. You had people that were managers of a fast food restaurant, not saying that's a bad job, but you probably don't have the money to have a $350,000 house plus 6 other $350,000 rental homes with no commitment as far as money down. So what caused that 2008 recession, again, was just, or not recession, but the drop in housing was just the absolute huge supply of houses that went back. No one qualified to buy them at the time, and that's what caused that pricing to drop. And this time around, I mean, we'll practically do a CAT scan and a blood test before we're going to give you a home loan. So the lending industry has been completely modified. The regulation is outstanding, and that's made these loans a lot stronger this time around. And we're at the lowest delinquency rates in mortgages in history right now because of that. Does everyone agree with the guidelines? No, but for the better and greater good, they did help achieve it. And I do agree. I don't think we're going to see housing values drop nearly like what we saw in 2008. And the biggest other thing too is the last 5 recessions that we've had, excluding 2008, out of those 5 recessions, housing values sustained and actually went up. They're tangible assets, just like gold and silver. People want them, they're safe, they do hold their value, and this time the bubble's not coming from the financial sector.
Andrew, just to be clear, my comparison versus that recession versus what's happening now was not to say that it was financial, was basically to say that we're not the stock market. There's a delay. We are not in a financial crisis. What caused this is not a financial crisis. It's a virus.
Right.
It's completely different. And no, I suspect we'll get over this quickly. And I think there'll be some pent up demand too. And once this black cloud kind of passes, I think we'll, if there is any kind of dip in the market, I think we'll bounce back real quick.
Damn, you're muted.
There we go. One of the reasons that I wanted to bring Chef Andrew on was because during times like this, we really need to learn how to adapt to these types of situations. And Chef Andrew lives in an area of the country where, I mean, you guys get snowed in sometimes.
Well, we got snowed in, but we also get hurricanes. I mean, I'm in the southeastern coast of North Carolina.
So can you share some of the technology that you and I use on a daily basis that helps us get face-to-face with our clients from the comfort of our couches, just like we're doing right now? We talked just a little bit to agents across the country as far as how they can use software like Zoom and Screencast-O-Matic to do video conferencing with their clients, with buyers, with sellers, how to do walkthroughs. I mean, we can screen share and even talk about contracts with our clients. Can you just touch on that a little bit, Andrew? Chef Andrew?
Sure. And Ryan will probably hate this since he's sitting in an actual office building, but this is the only device that you need to be relevant right now. I mean, everything else, the headphones, the cameras, they're all accessories. This is the only thing you need. It has 2 cameras built into it. It has Wi-Fi. It has cellular. It has the app version of Zoom, so you can still host the meeting. You can, record while you drive. You can send documents. Facebook is essentially a free CRM, so you don't have to drive somewhere to meet to get a signature. We have eSign, DigiSign, Dotloop, SkySlope, fill in the blank with whatever you personally use. We have all these tools, and yet we're trained. It's almost ingrained in us to get up and go somewhere to be productive. When you think about how long your commute is, I mean, if I went to an office, it would take me 25 minutes both ways with traffic. There's fuel burn, there's time burn. And then you get the people coming up to you like, oh, hey, what'd you do last weekend? It's Monday morning. Haven't seen you. Did you guys, how are the wife and kids, whatever. So that's what now is taking from 9 to 5. When in actuality, it takes about 2.5 to 4.5 hours to do your follow-up, to do your lead gen, because it's no longer cold calling 100 calls a day, bold, and things like that. It's how many conversations can you generate through social media? Throw up a question on Facebook, throw up an article on LinkedIn, post a picture on Instagram, link all that to Twitter somehow, and you've all of a sudden done a bold 1,000. You've gotten literally reached out and hit so many people, and they're going to see it on their time, not when it's convenient for you guys to meet. And like a 360 camera, I just did a video of downtown Wilmington on the riverfront today because it's dead right now with the coronavirus. Everybody's scared to go outside. I walked down the riverfront, and I'm going to upload it later so people can see in 360, Wilmington's still pretty. The water's still calm. Yeah, the restaurants and bars are closed, but there's still, the reason we live here is the beach and the ocean and the river. That's still, you know, I can be on the kayak and get a text saying, hey, this house is under contract. Boom. I mean, there's no reason to not work, to not slow down. What I think will happen is agents that are soccer moms that got their license just to do something from home, we're going to see that group and the other agents that aren't willing to be forward thinking and think outside the box, they're going to go get another 9-to-5 job wherever they can. But the ones that fully embrace all this crazy technology and charging things, those are going to be the agents that thrive, and the 80-20 rule will change. 20% that really, really lean into that and go with whatever seems crunchy, but it's generating results. Those are going to be the agents that are relevant, that are doing great business and are making the most money. But they're also going to be the ones that have the biggest impact on guiding people through this time, putting them in touch with the lender that knows all the answers, taking them to the attorney or title company that knows what to do because of this new set of guidelines.
Absolutely. And that's why I thought it was important for us to jump on today and share some of that stuff. You know, unless you're one of my clients or somebody that deals with me directly, you probably don't know that the majority of my business, I do over video. 99% of my buyer consultations, I do over, you know, either Screencast-O-Matic or Zoom, which is the software that we're using right now. It has a screen share function. This is, guys, this is $14.99 a month. Every agent can probably afford that. So, you know, if you feel like if your clients don't want to meet up with you in person, which right now is probably not the best idea, jump on, you know, grab the Zoom for $15 a month, do your meeting over Zoom. If you have a contract that they need to sign or that you need to explain to them, there's a quick screen share function where you hit a little button. Now you're sharing your screen live. You can walk them through the contract, and this can be recorded, and you can send them the link. So it's actually, in my opinion, a higher level of service, because rather than me being face-to-face with the client, explaining it one time, maybe they're nervous, maybe they forget to ask some questions. That's not going to happen because I'm going to be more thorough on that video. I'm not going to be rushed. They're still in the chat room, and I can send them the recording to watch over and over again, to where, hey, if their spouse needs to see it, if they forgot something, then they have a record of it. So it's actually an even higher level of service. Most of the time, our documents are signed electronically in real estate these days anyway, so that can still be done via email. One thing that people have been reaching out to me about is, okay, well, I have a listing. My sellers don't want to show the house now. What do I do? What you do is this. Exactly. I've got a 360 camera too. If you have a 360 camera available, that would be the holy grail. However, just like Chef Andrew said, you know, this is going to be a time where we need to break down those barriers. It's normally like, nobody can talk to my buyer, nobody can talk to my seller. That shit needs to go out the door right now. Your sellers, if they still want to have their property on the market and they want to get it sold and get it shown, they're going to have to be willing to pick up their device, either get on FaceTime with the buyers that want to see the property, or another option that's a little, you know, 1 degree of separation is, hey, if you've got a listing, open up a private group for that seller that's just about their property. And then if you have agents that are reaching out or people that are interested in seeing that seller's property, have your seller live stream a tour into that group. So that video is going to already be in the group. You can just add people to the group. They can see that. Or, hey, if they want to see certain features in the house, get your seller back on that phone, get them to live stream into that group, and allow the buyer to, you know, basically have them walk through all the different elements of the property so they're seeing it live time. I mean, that's the next best thing than being in person. That way you're still showing the home. You still have the opportunity to sell it. Your seller's not going to panic. Your buyers are not going to panic. You know, these are solutions that we can use and that we really should be using, you know, in this day and age, as far as the technology that's available to us.
Well, and Tam, the cool thing about 360 and about video is it's 24 hours a day, 7 days a week. So you can literally hold an open house whenever is convenient for the potential buyer. It doesn't matter. It doesn't have to be like between 1 and 3 on Sunday when you have a lot of people in your house and you're right now you're unsure if anybody's sick or not. You can do it when somebody gets off shift at 3 a.m. from the, hotel bar or the kitchen or whatever. It gives them a place and not a time. That's just effective use of time and marketing.
Absolutely.
I completely agree with both you guys. The only thing that I'm a little hesitant on is the buyers and sellers communicating together, because when buyers and sellers communicate together, problems happen. They're both highly emotional, and that's why we're here, is to control that emotion and to take the emotion out of it and keep things systematic. So, I think a good listing agent, a good buyer's agent get together and get the buyer and seller also on one of these like we're on, and then have the seller walk through the house and give the buyer a tour.
And that'll be where the quality of agent increases as we go through this, because you'll figure out what agent from what other company. There's a million different real estate companies, but you'll figure out who you work well with, and they'll even start leaving you positive reviews on Facebook and on Zillow and whatever, so that because they had a smooth transaction, because you're both using the same tech, using the same techniques, and you're familiar with each other enough. And I even found a program on my last transaction. I think it's called escrow or earnest. You can literally have the buyer send the earnest money through an app like Venmo to the attorney to hold the money. You never get the check. In North Carolina, we hold the checks and drive to the attorney's office or the listing company. It's insane.
You guys are a mortgage state?
Yeah.
Yeah. Okay. So yeah,
And
here it
we're
would be
working
just
over
to
here
straight to
like it's
title company.
1996, man. It's ugly. Like all this stuff is really unfamiliar to agents in the area. But the average age down here of an agent is like 58.
Same here.
Yeah.
Same here. I think agents need to realize that this is not a vacation. Okay. Like it's not time to catch up on Netflix. Right. It's not time to catch up on Netflix. Like you can't, the only thing you control is like who you like allow in your space. Right. Because we're supposed to be hunkered down. Right. The point of this whole quarantine thing is so like the more people that we come in contact with, the higher probability that someone's going to catch something, and this thing is going to spread as like a virus like it is. I think what agents need to be doing is they need to be looking at their systems. I mean, agents should have at all times be making a list of things while they're going through transactions, like, oh, I could improve this. Oh, I should make a checklist for this. Little things that they can improve. Well, if there is downtime right now, now's the time to be going back and creating those systems to make you more efficient. Okay. Or thinking outside the box and, how can you get in front of everybody right now? Because I guarantee there's a bunch of agents right now that are just be like, well, they're going to use this as an excuse. Exactly. Chef Andrew. They're going to be using this as an excuse to just do nothing. When I was a practicing agent, meaning I was representing buyers and sellers, I'm a broker now. And the foreclosure crisis hit, I remember a bunch of agents tuck-tailed and went back to doing whatever they were doing before. I started a publication called The Foreclosure, and I'm not tooting my own horn here. I'm just using this as an example. I started a foreclosure magazine where I distributed 50,000 copies per quarter of all the foreclosure properties, and they were in all the Alderson Smiths, and it was like I had 10, 15, 20 buyers a day calling me up, and I was able to thrive. So, during times like these, there's opportunity.
Yeah, it's just like the salmon and mating season, man. You got to swim upstream. Everybody else is going that way. The bears are going to get you, whatever. But if you keep going against whatever everybody else is doing, if you consistently do it and you consistently do it well, you're going to shine.
The other big thing too to note is how many times have you guys set time aside to do prospecting, and you're calling people during the day and they're busy, they've got a million things on their mind, they've got to make it to the football game, they got to make it to whatever. Every prospecting call I've done today and this entire week, I have full boat conversations right now. People have the time to talk, people have the time to really divulge and get into what's affecting them, to stop them to buy their full attention right now. So this is, if your systems are perfect and you got nothing really else to do, this is the golden time to prospect, to make those connections, to talk to your clients, because majority of them are sitting at home and they don't have anything to do, and they're willing to have that conversation. And at the other piece too, it gives you that opportunity to be a little bit compassionate as well to them, and just kind of talk to them a little bit and reassure them it's going to be okay. Not that any of us can tell the future, but at the same time, we can be there and be more than just that salesperson giving them a call right now.
Yeah, and even if you don't want to call, you can still, we all have Facebook, you can go live and talk to your sphere and be that. I mean, Tam started the lighthouse analogy. When storms are up and water's all crappy and boats don't know where to go, they see a lighthouse, they go towards it. Right now, the water's shit. Let's be the lighthouse, not the White House, the lighthouse, and be the beacon of hope, because everybody needs something to look at right now. And
Definitely.
that's where the agents that make it through this will thrive.
I'm so glad lender Andrew brought up the prospecting point. Andrew, can you also, I'm trying to unmute you. Can you also comment on, so you get to work with a lot of different agents. How common is it that agents are using the type of technology that Chef Andrew and I are talking about, that we use on a daily basis, that we're suggesting that other agents implement right now? Like a percentage basis, like what percentage of agents do you see already using this in their business right now?
Yeah, unfortunately, that's the thing. We work with a wide variety of agents, and not exaggerate or toot our own horn, but I mean, it's well over 70 or 80 agents, and maybe 10 of them are really the ones that use the right tools, actually care for those clients. And it's just, at the end of the day, you have to understand this is a career, right? This is not just, earn 10 grand and go spend it in 6 months and come back and do another transaction. And that's what the majority of the agents do. A lot of agents don't use the technology. They don't have the tools. They don't have the resources. And that's really a big part that, we tell all of our clients, especially when they're working with some of the better agents, like, you really got to stick with them with glue. I mean, stick to your agent, talk to them. Tam worked with you for many years now at this point, and no one delivers that same process that you do to the clients. No one challenges every step of the transaction, and I mean that in a positive way, and make sure the clients get that better deal and goes through the actual documents. I mean, outside of just using the technology piece, half of our agents that we see in the Valley, or even that we work with, don't even look at the purchase contract or review the settlement statement. And those are huge things that save our clients money. So if you're an agent in Vegas and you're watching this, everything on this webinar that Chef Andrew and Tam are using, use it. It's going to make you a better agent. It's going to make you a better professional. And the reason they're sharing these tips is they're not worried. You're not going to harm their business, because their business is already satisfied and happy with how they do business, and you should be using those same tools too.
Thank you. I mean, Andrew, you've seen a lot of the stuff that I do in my business. I mean, I use video for everything. I do my comps for my clients on video, and I tell my clients up front, the reason that I'm going to do this and provide this to you is because I want to educate and empower you. I don't want to show up at a property that I'm showing and for my clients to just take my word for, whatever I pull out of the air that I think it's worth. So I show up to every single showing with comps already done. I'm not that agent that says, oh yeah, I'll comp it later. No, I show up to every showing with the comps in hand in case my clients want to write an offer on that property. We don't have to do any guesswork. We'll look at the numbers right then and there. I definitely do a deep dive when I get back into the office, and I do that over video screen share so that my clients are looking at the MLS with me. They're looking at the price per square foot. We're going through the photos together, and I'm showing them the different conditions of the property, because that makes a huge difference when we're trying to come up with a valuation. I do dive more into comps when I provide comps to my appraisers. I mean, if there's a difficult property, the property that you and I just closed on, Andrew, I mean, that the numbers on that property could have been anywhere, really. There was comps to support any given price point. I went back 180 days and 2 miles out, and I found the relevant comps. And I don't know what happened with the appraiser's office, but there was some jumbling around with the upper management, but it came in at value. So at the end of the day, if you're an agent that can really educate yourself on the actual appraisal process, I mean, what we need to be doing is, the appraisers don't want to get in trouble. We need to be giving them the information that they need to cover their own asses, so that they can come in and say, hey, there is evidence for this value. So it's about going over and above and delivering at a higher level, and making sure that you're walking your clients through everything. You're empowering them, you're educating them, so that, you know, they're obviously relying on you, but at the end of the day, we want people to feel 100% confident that they're making decisions based on factual data, not opinions.
And
That's
Tam,
actually, go ahead.
go ahead, Ryan. Good.
Interestingly enough, that's actually how I first noticed Tam is I came across one of her videos of her talking about comps, and I'm like, wow, I'm like, that agent exactly meets what we look for at King Realty Group. And then interestingly enough, she was on my call list. I was going to call her, and then she wound up reaching out to me because she saw some of my videos, and it just kind of meshed. So, but she does a great job with those videos and how she talks about property value. I think she breaks it down and is able to use technology and use programs like this to definitely stand apart.
And that's why you stood out to me too. I mean, shameless plug about my broker, but you know, that's how I know Chef Andrew. You know, we were part of a coaching program together where we really dove deep into Facebook ads and retargeting and all of that kind of technology. So when I was at my previous brokerage, you know, the idea was supposed to be based on technology, but at the end of the day, there was no technology. None of it was even set up or available. But in the meantime, I see Ryan's face in my feed every single day over and over. And that's all I see is dude's ads. So I'm like, well, hey, that's probably the kind of broker that I need to work for, is somebody that does understand technology, that's not going to tell you to take your pencil and have a client sign, you know, a paper contract that, you know, that can support you in all different ways, especially when it comes to understanding technology in today's day and age.
Appreciate that,
And
Tam.
the one thing I would add to that is that what Tam does with the comps and the video and the screen sharing and the live recordings, it peels back the curtain of what we actually do behind the scenes. I mean, Tam, I know you got a restaurant background. How cool is it when somebody who's in their evening gown, who doesn't think they're supposed to be in the kitchen, gets to look in the window and see the food? They feel like they're doing something they're not supposed to, and they're getting away with it. When they see the comps being done, or the fact that you're zooming out 2 miles and going back a year and a half, that is powerful. I mean, they get so excited because they're like, ooh, I got to drive the car that I'm not supposed to drive. I got to see something that's not yet released. This is awesome. And that alone is a huge testimonial to the level of agent that they have. So they're going to tell all their friends, no, she let me see the production line. I didn't have to sit in the lobby. This was great.
That's one thing I love to tell my first-time buyers, especially, you know, first-time buyers are always nervous because they don't know anything about the process. And I tell them, listen, I'm going to hold your hand every step of the way. There's nothing that you're going to forget or that you're going to miss, because between me, Andrew, our escrow professionals, like, we have all of this handled. We won't allow you to miss out on anything. And I tell my buyers this. I can guarantee you, as a first-time home buyer, by the end of this transaction, you will be more educated on the real estate process than the majority of working real estate agents in the city right now. You know, because I'll educate them every step of the way and tell them what nobody else wants to talk about. And, you know, a lot of people don't like to talk about rates, fees, things like that. I don't have to be fearful of talking about those things with my clients because of Andrew, because I have a resource like, you know, like Andrew, like Sydney Johnson, like people that are loan brokers that are not going to charge you a bunch of junk fees, that are going to guarantee you that you're going to get the best rate that you qualify for, and there's nothing hidden in it. So it's, you know, it's a huge resource to have people like that around you. One last thing I wanted to talk about before we get off is, you know, there's going to be many different types of people that are experiencing hardships right now. Some people have money in the bank and are prepared for this, and, you know, it's obviously going to affect them, but not as drastically as other people. In Las Vegas, we're a service-based community. The entire Las Vegas Strip has been shut down. All the hotels, all the casinos, all non-vital businesses. So that is going to have a drastic trickle-down emotional, mental, sociological, and economical effect on everybody around us in our community. So I think, especially if you are in a leadership position, if you are an influencer, please be careful right now, like what you talk about, what you say, the look on your face, if you're laughing, if you're, you know, kind of making light of the situation, because as much as we want to be lighthearted and, you know, like not freak people out, it's not about panic, but we do need to be compassionate about what people are seeing right now, what people are experiencing, what people are feeling. People will be affected by this. People will die because of this. People have already lost their jobs. I mean, people are going to be going through some financial hardships right now. So it's very important for us all to be compassionate, speak to each other with respect. If there's people around you that you can help, if you have, you know, an elderly person that you live next to, your grandparents, your parents, make sure that we're reaching out to these people. You know, if you're in that healthy demographic of people that's least likely to be affected. I mean, you know, I called my grandpa today and was like, don't leave. If you need to go to the store, call me, I'll go for you. You know, those are the little things that we can do in our community just to help each other and to be supportive during a time like this.
Agreed, Tam.
Yes.
And
Right.
I know too, Chef Andrew, you're not probably part of this piece of it, but for everyone that is in Vegas, I mean, let's not forget, you know, Vegas Strong. That we came together when we had the huge event back in October, October 1. At the end of the day, we're all a community, and we've got to make sure that we do support and take care of each other. That comes first before business. Not saying don't do business, but make sure that we're taking care of all of our fellow Las Vegans per se as well.
That Vegas Strong is definitely something that I think is I mean, this town's resilient and always has had an ability to pick itself up, dust itself off, and move forward and reinvent itself. And you know, this too shall pass, and we shall get past this.
Absolutely. If you need an awesome recipe, if you're buying real estate in any other part of the country, Andrew Pierce, Chef Andrew is your way to go. If you are an agent, or if you're looking to refi, or you're looking to buy a property, Andrew Leavitt, PIF Lending, Pay It Forward Lending. He's a loan broker. He will guarantee you the best rate with no lending fees. Ryan King, he's a broker here in Las Vegas at King Realty Group. If you're an agent that's looking for a broker without a huge ego, that is willing to take a stand for you, that knows about technology, that will have your back, that's just an honest and real person, I suggest you shoot him a message.
Thank you.
All right, guys. Thank you.
Hi, guys.
Bye, guys.